Good afternoon, traders. It's Bill Baruch with Blue Line Futures. Then it's your midday market minute. Equity markets were stable overnight, but we're seeing that dissipate. 2805 is the big level in the S&P, and we've said as long as it stays below there, you're going to have the bears in the driver's seat. For the NASDAQ, the immediate driver's seat, that's 7240, 7270 area. And listen, you're seeing that price action stay ultimately below that as well, and we're setting up for some weaker action into the close. GDP data was confirmed in line on that second read of expectations. However, wholesale inventories for April month over month were bigger than expected, and that's not a very good sign for the economy. It's going to weigh on Q2 GDP. Ultimately, though, you're seeing this action set up to press what was a weak low yesterday. We've said that in the Morning Express, and we're expecting for another test lower as long as this price action stays below those key resistance levels. Now, crude oil is not helping the situation. It's failed near $60. That's the level we've said to fade crude oil and sell against. The EIA inventory report, the crude numbers were nowhere near the draw that we saw from API last night. They were really just right around neutral, but gasoline confirmed the build. So we're seeing this as a bearish report. 100,000 barrels of production added as well on the estimated side. And again, the bears in the driver's seat here after a failure. The sort of dead cat bounce recovery we've seen over the last several trading sessions since last Thursday failed at the right level, but the technical damage that was done on that bloodbath on Thursday is setting up for further weakness. Really 55.80s in the cards, potentially 54.5 if it stays weak here in a close below 58 bucks. Now, gold is seeing some firm price action with the overall safe haven demand. The dollar index, though, is priming for a breakout above 98. So despite the stronger dollar, it is holding gold back, but gold is holding ground fairly well. Treasuries were lower overnight, and they've climbed back to test right around unchanged and test into the green. Remember, those 10-year and 30-year Treasury yields are at the lowest levels in about 18 months. So right now, that's helping gold, but we want to see gold hold out above 1288, and if it can do that in the August contract, it's very constructive, and we want to think that it can regain that 1300 mark, but a very good bottom over the past couple of weeks here, holding the 200-day moving average, and the August contract is obviously very constructive in doing that. Give us a call. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.